brought to you by OptionsHouse. Joe, how you doing this morning?
I'm pretty good this morning, Joel. How are you?
Pretty good, pretty good. I have a slight confession to make on the show today.
Oh boy, here we go.
Yeah,
Taxi cab confessions
yeah,
brought to you by Benzinga.
and I am the biggest loser on the desk. I know I have a lot of competition here with you guys, but Lisa, I just thought last night talking with Lisa, then I just thought I'd throw it out. I go, have you ever heard of this show called Trailer Park?
You don't even get the name right. You say
Jesus.
Trailer
not
Park?
Trailer
What
Park
is it?
Boys.
Trailer
Trailer
Park?
Park
Trailer Park
Boys.
Boys.
Trailer Park Boys. Well, whatever.
Joel.
She's heard of it.
Of course she has. Your
she's
wife
heard
is
of
an
it.
incredibly
Everybody's heard of it.
intelligent, cultured woman.
Yeah, and she kind of looked at me like, "You never heard of that?" And I'm like, "No." And I'm gonna have to talk to my girls about it. I guess they watch it, so that makes me the biggest non-TV watcher of the crew.
Well, we knew that already, Joel, but I'm glad that you finally joined. Now, if we could start getting you to watch the episodes, then you would understand what I went to see the other night.
Can you DVR them?
I don't know how to respond to that because I watch them on Netflix. I don't even have a DVR.
All right, Dennis. Let's.
Sarah just looked at me like I have lobsters coming out of my ears because I don't have one. But she's just jealous because she doesn't have Netflix.
Okay. Dennis, first of all, we have to alert our traders that we got the roll going on in the S&P.
We're rolling.
We are
Futures
now
roll.
we are now trading the March 2014 contract. So you people that are looking down and see different numbers on the levels that we post and we talk about, it is because we are now trading a new contract. And Dennis, how about the technical damage that was inflicted on the market yesterday?
You've been waiting for this sell-off since birth, haven't you, Joel?
uh, you know,
Triple
Since the
top
first
scenario.
grade, Joel's been
It's
waiting
come
for
to
this since he was
fruition.
6 years old.
no, I mean we did have a valid. We had a technical formation that we all can rely on, and it was the dreaded triple top. Now, yeah, in the March contract, we've come down a little bit, so it was at the 1250 level, or excuse me, 1811, 181250 level. But basis the March contract, the super secret magic number now, all-time high is 1805.75.
So basically, we got 7-point difference between the March and the December. If you don't feel like rolling your contract today, December is obviously still trading for the next week and a half.
And
but
Dennis, why don't
we
you
will be
explain to
quoting
them? Explain to them why there's a difference in the premium in those contracts.
It's basically just the difference. Like the futures contract is basically just made up of the future value of the dividends. So you can look at if you own the actual index and owned all the stocks, you would be receiving the dividends, but it would cost you money to hold all of the stocks. So it's basically the difference between the dividends and the interest over the course of the next 3 months. Historically speaking, usually the futures contract is worth more than the cash because the interest rates are usually higher than the dividends. But we are in such a low interest rate environment that obviously the dividends are worth more than, or actually you get more from the dividends than you would pay for the interest.
For the cash, correct?
Low.
Cash is trash. And would you?
How'd I do, Joel?
Very good. And would you interpret that the March contract was trading lower than the December contract? Perhaps that the street is factoring a correction and lower prices for the index over the next quarter.
It just trades lower because of the futures and the interest. So you can try to draw a bear thesis from that all you want, Joel. But
It should trade higher, though, shouldn't it? If there's more time value, I mean, you got to take the time value in there, and you also have to take the future.
it's all interest and dividends. So, and it's the time value of the money. The time value of the money in a 0% environment or 1% environment that we're still in. But if you get the taper coming, maybe it changes things.
Also, interestingly, the S&Ps. I know it was a long time ago. Back on Friday, we had the vacuum up move because of the unemployment number. Well, basically, we gave all that back, Dennis, in one session, and then some. We're actually trading below the level from Thursday's close. So it looks like all that good news is thrown out the door.
Yeah, and honestly, yesterday it felt like a little bit more of a real sell-off because it was selling. There were still a few stocks that were up, but I was looking at the leaderboard and almost everything was red. They were actually hitting interest rate sensitive stuff too. Even if you bring up like the TLT, you can kind of often see how the 20-year treasuries, but they were hitting the interest rate sensitive stuff. They were hitting the preferreds just a little bit, not crazy crazy, but if you bring up the ETF PFF, you can see they were knocking that down a little bit too. They were hitting some of the other interest rate sensitive stuff as well. So there were definitely some concerns there across the board yesterday, selling all asset classes.
Right, and getting a little. Actually, that PFF is in danger zone here. Danger, danger, Will Robinson, making a new low here.
Yeah, and interesting enough, you can see how concerned they are because there are individual preferred stocks out there that are now yielding well over 7%. And that's been a while since we've been seeing that you can pick up some preferreds at 7. Like if you look at, and you can look at this one, I know the symbology is probably going to mess you up, but GS Goldman Sachs has a preferred. It's I think PRI. I don't know if you can bring it up. I don't know if you can bring up preferreds in this software here or not. We'll figure that out though. But if you can, it's the I listing of GS.PRI. It's yielding 7.07% right now. And obviously this stock here or this preferred stock was trading at $23 just about a month and a half ago. It's trading at 21 right now to yield that high. There's a lot of other ones too, though, that are actually starting to yield over 7% too. I've always had this Dillard's one forever. The thing is, that one's callable, so it's probably that's DDT. It's probably going to be hanging out around 25 for quite some time because they're honestly expecting a call. It's been callable for the last 4 years, though, and still has not been called. So, do you got the DDT one? Bring that up,
Yeah,
Joel.
actually, JH3 just mentioned that. Did you? Oh, there it is. DDT. He's been looking for a long entry in this one, and let's see. We're bringing up the data here. I mean, how?
It's gonna do not a lot. This preferred stock is callable, and what that means is that the issuer, who is Dillard's, can call this now at any time. This preferred stock yields, I think it's 7.5%. So you would think Dillard's, being in pretty good shape here, would eventually call this preferred in and obviously issue a lower one because they probably issue one at 6 or 6.5, probably 6.5. They could get away with and save themselves a little bit of money. They have not done that though, so I actually own it. It's one of the biggest positions in my portfolio. I've been sitting on it for about 5 years here, though. I bought some during the credit crisis. I also bought some more recently, just because I think the $25 area is probably it's probably not going to trade much below 25 unless we really get into an issue of interest rates really skyrocketing because the yield is 7.5%. And if they don't call it, you just keep picking up that yield. I don't see it moving much, though. It's probably going to stick around $25 and just continue to pay you every quarter that dividend, which it pays out, which is I think like 45 cents or whatever it works out to be 7.5% annually.
So you're looking to step your toe in the water here at this 25. I mean, it really doesn't make a difference if you pay 25.14, 25.50. I
No,
mean, it really doesn't.
no.
So really, the only way you could get in really any kind of deep doo doo in this is like you did during the financial crisis here.
Or
Uh,
if interest rates really were to skyrocket, and then all of a sudden, like we were saying, a Goldman Sachs one right now yielding 7.2%. If that all these other preferred start yielding up 7.8, 7.9, they'll hit this one down to give it that yield as well. So there is downside. That would be the only way, is if interest rates really did. If you really are concerned, the taper's coming, and eventually they're going to start raising interest rates drastically, they will whack this kind of stuff.
but they're
But
not
I
going to
mean,
do it
interest rates are a
drastically.
long ways
Yeah,
away from
yeah.
7.5%, so it's not like this thing's yielding 5. And we'll have to figure out the symbology on this, and if we can bring up some of the other
Okay.
ones, because a lot of these companies reissued preferreds last year at 5.5, 6%. They were trading at par at $25. Most of those are down at like 18, 19, $20 now because of the interest rate concerns. And when you're buying a preferred stock, it's like buying a long-term, because a lot of these are perpetual, so they just go on forever. So it's basically like buying a long-term bond on the company more than anything. Except obviously the bonds, if the company was going to liquidation, the bonds would take preference over the preferreds. But that's how it trades, is like a long-term bond of the company.
And
So if you're yielding 7.5%, it's pretty safe that it's probably not going to get killed down to an 8 or 9% yield on a solid company. So obviously, Dillard's, you look at the common stock, DDS, and it's trading up near all-time highs. That makes me feel pretty safe. You get into some of these other ones here, like I know in some of those REITs and some of the other ones, some of those are yielding up to 8, 9% now, even 10%, but the underlying stocks are a little bit of a concern. So, because those things are so levered. So if interest rates going up, that would hurt those as well.
And also, I mean, we should keep. I will find out the symbology on those preferreds because I can remember talking, chatting with you during the financial crisis and things like that when the markets were going down, and I can remember you saying, the preferreds and the stuff is getting whacked, and that is really what kind of alerted you to the entire meltdown is when people were dumping, not only dumping the regular issues, but were dumping the more conservative investments as well.
I'll put it in perspective for you. And some of them did go to zero. Like you had the Fannies and Freddies that pretty much went off the board. And I know they're trading off exchange now. The Lehman Brother preferreds went to zero, obviously, with the Lehman Brothers bankruptcy. But you had other ones. And how I was playing this during the financial crisis, this is just, storytelling, basically. There was this HSBC preferred, which was yielding 42%. Not kidding you. It was yielding 42% a year. They had knocked it down that much. The common stock was down about 50%. The preferred was trading at 25 before the financial crisis. It was trading down at $3.90. So here I'm looking at the preferred. It's down like 75, 80%. What did I do? Well, I don't know if this is going to get serious. Maybe, we're watching, Bear Stearns go down, Merrill. Maybe HSBC is in trouble too. What I did was I shorted the common and bought the preferred. And basically, so if they both go to zero, well, then I should be okay. I shorted the same dollar amounts. But if they don't both go to zero, I see 50% upside. If everything turned around in the long run, I see 50% upside, but I see a lot more upside in the preferred, and it's paying me 43% a year. So that was one of my best trades ever. And I did that with quite a few actually different financial companies. I was shorting the commons against the preferreds and picking them up. Now you can't do anything like this now because obviously on the preferreds are
Right.
trading basically all near par, so there's no upside there, and the commons could continue to go up. So this is just storytelling from the financial crisis, but it just shows you how they were throwing out the babies with the bathwater there. They were dumping everything, and they dumped the preferreds, which had a lot less liquidity, a lot harder than some of the commons. And I know even you, Joel, weren't you picking up like a Morgan Stanley one or
Yeah,
something back
yeah, I
then?
did. Yep, I did. When those things, and believe me, I bought it. I believe I bought it when the stock was traded like around 25, 26, and I loaded up on them. It was a great preferred, and man, when that stock went to $6, I was like, oh my god, But then it ended up recovering, ended up being a very, very good investment. Before, just real quickly, you were short the common, so even though you were holding
I was
the
hedging myself.
yeah, it was a good hedge. Yeah, that was a rare opportunity. Before we
And I
move,
actually was able to cover the hedge pretty flat, and I honestly held the preferreds because they were paying me. I still have some of that preferred stock. I've sold most of it, but even going back, I still have some of that little small position left in that HSBC preferred.
okay, before we move on to our regular show, we got a few questions here, and of course JH3 is asking about this Sun Edison
Oh yeah.
lowered guidance yesterday. JH3,
Uh-oh.
I hope you unloaded before that. They did take the stock down to 1131 in the pre-market here. Now just kind of jumping up to
Wow.
down to the up to the 1175 area, kind of consolidation here.
Mm.
Opening it at a very important level, JH3. It did get to 1131 in the pre-market, but look at all those lows here on the daily around 1175. Had a couple lows in that area. Or excuse me, no, I'm looking at the chart wrong. There was major lows at the $12
12
area.
bucks, yeah.
Yeah, we have taken that out. So I wouldn't get a whole lot of interest in this stock until it can back over 12 and hold that level. And also, you got a long ways to fill the gap. So I guess the next major support level would be the $11 low that you had going back. See when we had that $11 low. $11 low on November 11th. But Dennis, a lot of times when these company comes out with news like this, I mean, they just don't turn around and go back up. You got to kind of wait for the dust to settle a bit, huh?
Yeah, you get that post lowered guidance downdrift too. Like we were saying, post earnings drift. There is often a drift in the direction of the initial move. You'll have, some type of, bounce back day. Maybe we get, a little bit of a shorts covering or whatever it is, or even people picking bottoms. But eventually it often does continue on in the direction of the initial move here, where you can have that drift. And we know Chris, he tries to profit, Chris Banny, who's on the show a couple weeks, tries to profit from those drifts after the lower earnings and do stuff like this. So this is a situation here where they just lowered guidance. I mean, it's hard to just come in here and say, oh, it's going to turn around, because they're telling you that the next quarter or two is not going to be good. So they're giving you a heads up on the fundamentals. That's probably not that good of news out there for at least the next immediate future here. So it's difficult. So I think you're giving a good number there, 12, Joel. I think if this thing does stay below 12, it's probably going to find some sellers there. Obviously, if 12, for whatever reason, get back up and hold 12, maybe, but I'd say below 12, I don't want to own this thing.
Okay, and one more stock before we go into our regular broadcast. The ordinary shares of Prothena Corporation here.
PRTA.
Yeah, PRTA. Brent, Joe, I don't know if anything's hit the wires yet.
It was last night, actually. They halted the stock last night after the close, announcing a deal to co-promote and co-develop a treatment for Parkinson's with Roche. Prothena will get an upfront payment of 45 million and could win up to 600 million in milestone payments following that initial payment. Big news for Prothena.
It's popping on it right up, and look where these things pop to, right to $30 on the kisser
Actually,
here.
got a little more overdone that there, Dennis.
Earlier on, did it? Yeah.
Yeah. They took it up. The initial spike was to 31.90.
Oh,
Took it back down.
excited.
Took it back down under 28 here. Just kind of hanging out at the $30 level. I mean, this would have been one of those stocks where you talked to me yesterday, and I'd say, "Oh my gosh, if it goes through that quadruple top here, you gotta own it at the 28.50 level." Well, that's not a chance now. That will act as support here. If we come back down using the pre-market high, let's go a little bit longer term. This is just uncharted grounds for this stock, Dennis. It's never been up here before, so hard to give some parameters besides that pre-market high. But first of all, Roche is a huge partner, and then those numbers that Brent was just talking about. I mean, they were. I wonder what the total earnings are for the company in the year.
That's what I'm looking right
now.
now.
Yeah, that would just seem to blow away. Their current estimates and current sales figures.
I mean, you get a big name like Roche, and what more do traders need? They ask questions later. I see a market cap of under 500 million for Prothena, so basically doubling the value of the company on one deal.
Whew, wow.
Potentially.
Okay, all right. Well, good news for PRTA shareholders this morning. Dennis, what else do we have on the radar?
We got a lot of news here.
Okay.
Let's start with Facebook. It is absolutely flying here last night and this morning. They pulled a fast one on us there. We thought it was going to be announced last week that they were going to the S&P 500, and then shareholders were disappointed, obviously, that next day when they didn't get in. Well, they're getting in last night. They're bumping Teradyne. TER is coming out. Facebook is going into the S&P 500 and into the S&P 100. So Facebook getting some love from the S&P.
Straight up move on this
Right
in
up.
the pre-market. We got the
After hours last night, yeah.
after hours. Let me bring that chart up real quick. We got the 51.69, and then just kind of been trading pretty much above 51. We just had a dip here a few minutes ago under 51, but that's still the level that I'm looking at here. Looking at the daily chart here, $52. Look at that, Dennis. You got a couple tops right there at 52. This was after the earnings. Made a high at 52.09. Also made a high at 52 even. Not saying to go out and short it at 52, but a lot of people sitting in a lot of gains here. And also, Dennis, fundamentally, I mean, how does this change the company?
You took my question, Joel. I was just going to ask that one.
It doesn't, but the indexer's got to come in and buy it. And usually when you go into the S&P 500, typically that's worth 3 to 5%. So it's probably pricing at what it's worth. I would guess, like if looking at this yesterday, if you were saying Facebook's going to go in, what's that worth? I'd say probably $1.50. So it's up $1.89. So it's probably worth. I don't think this is going to turn around and just give these gains back at all. So I'm definitely not interested in shorting this at this point in time. It's obviously broke out the last couple of days over the key $50 level, despite closing over it yesterday. This is huge news for Facebook to finally be in the S&P, and obviously the indexers all got to come and buy the stock, and
Yeah, but
that's
don't
what
you
you're seeing.
think? I mean, if you're a sophisticated indexer, aren't you kind of anticipating these kind of things, and
The
already have?
indexers have to own the index, though. If you're owning the index, you can't anticipate. You have to buy, obviously, when it's going into the index. So you can't say, oh, I think I'm going to, because people are buying your product to own those stocks. So there's no
Then
choice in the matter. There's no anticipating. That's, just Facebook's going in and Teradyne's going out. You got to sell Teradyne and buy Facebook. There's no choice in the matter. So
so
it's different if you're trying to, if you're doing an actively managed portfolio or something. Yeah, you can anticipate stuff like this. But when you're just running an index portfolio, there's no anticipation. They got to own it when they own it, when it's in there. So, and now it's been officially announced. So obviously by, whenever it's put in there, the
okay,
indexers will have to own it then those days. So
okay,
that's why you see the pop.
I'm wrong. And Teradyne's unchanged though. You think they'll whack that stock? Is it offered lower?
It usually is when they go down. It just actually traded some shares up at 1690, which is interesting. Usually they do knock them down, but there's no bid, there's no market in this. I'm telling you, it's 1501 is the best bid down there right now. Best offers up at 1763. I would think they would knock it down a little bit here. Obviously going in is usually more influential than coming out, but usually they do knock them down when they come out. So there's a couple other stocks going in there too, Joel. ADS is going to go in, which is Alliance Data Systems. If you like trading $240 stocks,
Oh
if you don't
yeah.
like trading $240 stocks, Mohawk MHK, which is a $140 stock, it's going to go in here as well. Both those stocks are bid up, not really trading too actively here yet, but they are both bid up.
Just on this MHK, I mean, some people may, use this if you're holding the Facebook or these stocks long and you've been looking for an exit point and hey, it hit your target. And here, that multiple highs in the 145 area,
Yep,
145.
145.
Yeah,
I
keep
like
an
that.
eye on that. Still another $2.50 away, but well, we'll keep an eye on the action in those two issues for sure.
Yeah, it'll be interesting to see if it can get up there, test that resistance again, maybe give you a fifth shot. It's been up there one, two, three, four, 5 times in the last month, basically. Cannot get through that 145. It's been like a wall there. Somebody offered at 144.43, so I guess he's selling ahead of that 145 resistance there as well. And if you're playing the whole, 3, 4% up on this, if you think it's worth that, that's where it's gonna, probably put it as somewhere between 143 and 145. So, and then ADS too, obviously, is going to trade higher here too, I'd imagine today on being included in the index, and it's struggling this whole 250 area. So somebody offered a 249.93. So some pre-market traders are using the key levels here today, Joel.
Yep, and they're probably doing it as they listen to Benzinga's pre-market info, brought to you
They'll
by
adjust.
OptionsHouse. I wonder if
Uh,
it's one of their 150 free trades.
yeah, it could be. Lululemon, LULU, reported earnings this morning. They were pretty good, actually. 45 cents versus 41 cents. So beat on the bottom line. 379 million versus 376 million on the top line. So beat on the top, beat on the bottom. But then they talked about guidance. Lowering Q4 guidance pretty
Whoa!
significantly here. They're saying they're going to make 78 to 80. Analyst estimates were up at 84. But these sales figures, analyst estimates were up at 571 million for Q4. They're seeing only 535 to 540 million. So you're talking about an 8 to 10% hit on sales here. They're projecting or below analyst estimates. That is significant, and they are killing the stock to the tune of 9% this morning.
Made a pre-market low here. They got really excited on this
News
one.
algo.
Yep, news algo. 5802. 5802. And
Wow.
whoever bought that in a 58 handle
You're a genius.
is saying get me out at 6250. I mean,
Three,
that's
4 points.
yeah, that's been holding up over the last hour. I just would use that as a resistance point. I guess the story's over for Lulu, huh? I mean, this is man, I can't even. I'm on the weekly here. I can't even find anything on the weekly. You did have some lows at 59.77 here on the weekly, going back to June of this year. Hey, it was back down in that area, and then if you would so call that the $60 level, and then if you want to go below that, you had a major low at 52.20. But is the story over for this maker of yoga pants?
I don't know if I'd go as far to say this is the story over, but it's definitely not good news. Again, we'll say the same thing that we just said on the last talk. We were talking about the lowered guidance here. When you're lowering guidance, you often do get a drift where people are like, "Man, not that interested in owning this." So you gotta let the dust settle. See, they knock it 9% off the price. Well, that's what they were saying. The sales are going to be lower. So to me, that kind of looks like they're pricing in pretty much the entire lowered sales guidance here. $58 just seemed like a ridiculous overshoot. I don't think you're going to see that today. You got the big psychological level of 60. I'd imagine if it does continue to drift down, you'll probably find some buyers at a big whole number like that. But 62.05, yeah, it's kind of fairly priced, is what I'm saying.
I just want to take a quick look here at Merck, and we had talked about that a
It's ex
while.
dividend today.
Oh, it's ex-dividend today.
Yeah, I'm
Okay.
actually short it.
Uh, okay. You just want to explain to any of our listeners here as far as the ex-dividend and the way you play it going in, and where other potential dividend players play this stock on both sides.
What you typically see is often a run up ahead of the ex dividend date. And Merck isn't the best example. It's a pharmaceutical company. The yield's 3.6. You see this better on stocks like AT&T and Verizon. But typically you will see strength going into the ex dividend date and weakness after. And the play often is to buy it ahead of the ex dividend. Sometimes take it through, and sometimes I do. Sometimes I sell it if I get a pre dividend and or ex dividend run. And then often you'll see weakness following the couple days after it goes ex-dividend. Hence, I'm short it for today. We'll see, how long I hold that. I'm a short little-term scalper, so I'll probably cover very fairly quickly. But it went ex-dividend for 44 cents here overnight. So the close is 48.95. The adjusted close for the dividend is 48.51. So that's the new adjusted close. Obviously, everybody, if this gets up to 48.95, then the people who took it home overnight for the dividend are all excited because they actually could scratch a trade and get the 44-cent dividend. But basically, that's all you see. You see a little bit of a run up ahead of the ex dividend date, and typically a few days after you see some weakness. So, but Merck had a big down day there yesterday too with the overall market. So it might have caught a few people that were playing that strategy by surprise, because that's obviously when you have when you have the S&P futures down 20 points, I don't care if it's the next dividend day tomorrow or not. It's probably going to show weakness when it's an S&P stock.
And where is the adjusted close for Merck today?
It's 48.51. So actually it's trading up 4 cents right now, 48.55. That was last trade. Very, very light volume. Sporadic only traded 1,400 shares here today. So it's trading up 4 cents here.
And how
A
about
couple
how about your buddy that sold a million there at 50? Remember we were talking about
50's
that?
huge, yeah,
Yeah, I
and he
mean,
was smart. I guess that guy was smart. He had that million share sell order at 50. It took it out. The breakout became a fake out there, got up to 50.42, but then the next day started to show weakness right away, and then the next day actually couldn't get back over 50. That was your tell that this breakout probably wasn't working. Somebody was smart there selling a million at 50. This is also one of my biggest investments in my portfolio. I still like this company from an investment standpoint, but from a trade, it's had a hell of a run. That's a big run in November when you go from 44 to 50 and 50 and a half, because this is typically a lower beta stock. And so it's starting to look a little bit heavy and a little bit concerning, and especially if they're going to start whacking interest rate stuff like we were saying. This is a 3.6% yield and can sometimes trade like a interest rate stock. So that's a little bit concerning here as well. If you want to stick on the ex-dividend theme here too, Joe, we got a couple other big ones here. Disney went ex-dividend today too as well. DIS had a dividend of 86 cents here. So the close was 70.52. The adjusted close 69.66. It's trading 69.72, so it's trading just about flat here. A few other ones. DT Energy is pretty big ex-dividend day yesterday, actually, or today. DTE went ex-dividend for 65 cents. You had AFG, which is American Financial Group. That went ex-dividend for $1. So this is important information. We do try to post the main ones down there on the bottom. You can see their DTs on there, and Dr. Pepper. Whoever posted this missed Disney, so we'll definitely have to kick somebody in the butt for missing Disney on a top ex-dividend date, and also Merck. But regardless, you can see right at the bottom of the sheet, we usually post the top 3 or 4 or the top 5, but there's usually, well, today there looks like a good 20, 30 companies, like major companies that went ex-dividend. So they kind of go in bunches.
okay. So what else? What else do we have on the radar today?
Well, Sienna, we can talk about the Sienna earnings, and they are actually trading down 10% too. I guess it's report and whack the stock 10% day. Sienna missed big time, 16 cents versus 24. The revenue beat 583 versus 567 million, but that earnings number of 16 cents versus analyst estimates of 24, they are not liking that. Stock closed at 22.90. It's down 10% on the button right now, trading at 20.61.
Okay, there I got it. I was struggling with the symbol there a little bit.
CIEN.
Yeah, I got it. I was going Sienna there. I guess it must be your Canadian accent. It's traded down quite a bit here, 230 in the pre-market. Let's just take a
How low have
look.
we got?
Yeah, we got down. What do you think we got down to? Without
Probably 20 bucks.
2010, 20.
That's big whole numbers, man. Those things work. And you want to know why? I'm going to tell you again. You get people that are gambling on the out of the money calls. The 20s probably huge, or out of the money puts. The 20s probably got huge interest on it. I don't know if it does. I didn't look it up, but I just imagine there's a few people gambling. So it's probably got pretty sizable open interest. Starts getting down there, and then they can start picking bottoms, and they get a free look at the upside there. So it gets those big numbers, and then even look technically back, in August, and we had the multiple formations of 20. So it's just kind of, and this is where I never say pick bottoms here after hours of pre-market. And sometimes I actually try to do it just if there's huge open interest at a strike price like that at 20. Sometimes that's where the stock will reverse, and that's looks like
Could you
what
just
happened.
explain that again real quickly? That the people that had the 20 puts on, what the advantage that they have, or yeah, I guess it would the advantage that they have that they be able to buy the stock there at that level and have a free look at the upside.
Well, it could play it two ways. If you think it's going to go through 20, if you think it's got enough momentum to continue to fall after it's already fallen 10% or 12%, you could say, oh, I'm going to hold the 20 puts and it's going to go down to 19 or 18. But typically, people, once it gets close, and this is what I sometimes do, if you have an out of the money option, I don't know what that was going for, but it was 10% out of the money. So it's probably going for like a nickel or a dime, those 20s. Maybe it was going for more than that. I didn't look it up. But it's probably not worth that much. So if you had those, if you have the put, you can just hold it and then you get exposure obviously to below 20. But if you have the put, you can also play it another way. And this is the way I like to play it sometimes, is I actually could buy the stock at $20. Now I already have my insurance, so I have a free look at the upside. So if this stock bounces off the 20, which I think it might do, if it continues to go down to 19, you exercise your put, you're out at 20. So if you buy it at 20, you can exercise your put, get out at 20, and you scratch the trade, netting out whatever you paid for that put. But if you buy the 20 and you've still got it and the stock reverses and you buy it at 20, now you get to participate in the upside. And right now it's already up 55 cents. So if you're thinking there's no way it's getting through that 20, I got those 20 puts, gets down 2010, maybe I'll pick some stock up here. And, I'm only risking 10 cents on the
So
downside.
you can actually, even though you're put, when depending on your timing, and that's why options are really difficult, and you got to have the
Yes.
proper time frame. That even though you have the 20 puts, let's say you had the weeklies or whatever, I don't even know if they
Yeah.
trade weeklies on this.
Or
Here,
monthly or
you
what.
can, even though the stock never trades below $20. I'm not saying it's not going to trade below 20 today, but that's a way that you can profit by, you know. Trading some of these out of the money options. I mean,
Yep.
what is it? Some ridiculous percentage of options that people like me buy, expire worthless.
Yeah, and
It's
and 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 that option would still expire worthless on you, but you'd have the stocks. They had the protection in place, the protective put play. And people do it that way, and I do it that way too. Like and I've started nibbling the options here in the last year a lot more heavy. I think I have about 15 option positions right on for December. So typically every strike that goes by, I'm playing. Usually I pick up, some out of the money options or something, and I didn't do Sienna, but if it's got earnings, sometimes I can pick it up on the cheap, 7-8% down. It gets a move in my direction. I pick up the stock, all of a sudden I'm in a very volatile stock and I've limited my risk. So it's a way to play, just a different way to play them. So there's so many different ways and different, it's just tools. But there's different ways to play options. You don't just always have to play them just, pure vanilla, like, oh, I own the 20 put. So if it goes to 19, I'm going to make $1. You can get creative with some of this stuff. And, obviously you can do, different spreads and you can do different things too. So I've learned a lot from Chris there because he's really dived into the options.
We're gonna have
Sang Lucci's too.
David.
We should get
Yeah,
Sang Lucci
yeah,
on.
yeah. Well, actually, we're gonna have David Ristau on, who does a lot with options credit spread. So we can delve into that issue. He's coming on at 8:45, so it'd be interesting to talk to him and see how he plays these kind of these volatile issues.
But even if you don't play the options, just being aware of those options open interest at significant strikes, you say, oh, it might reverse there. So that's the big thing I'm telling you. When the open interest is really high at a specific strike price and the stock all of a sudden moves quickly to that price, say, and it moves, has a 12% move to get there, it often will have a reversal near those strike prices. It can. If the news is really, really bad, I mean, they knock it right through it. But if you start seeing a pause and think about it, sometimes that's where it's going to reverse. So keep that in mind if you're trading even just the equity.
Okay, what else we got on the radar?
We got Adobe tonight going to report ADBE, so we might as well do a little highlight on this one here. We'll expect those earnings after the bell. Stock's been pretty weak here actually for the last 1, 2, 3, say, I don't know, 5, 6 trading sessions. We are trying to find some support here in this whole mid 44 area or 54 area. Below that though, it opens up.
And we call this the lean, right? The lean going into earnings here. The stock's had a major run since mid-October here. People obviously targeted above the $57 level here to take some profits, and then you get a steady downtrend here. You could probably, if you're a trend line kind of person here, you could probably draw some trend lines at least off that high that you had just above 57. Looking at some very critical support here ahead of earnings. 54.47 was your low on the 5th. Had a low yesterday at 58. Then if you go back a little bit farther on the chart here, 54.49. So ahead of earnings, Adobe coming into a major support level.
Let's just move on here to a few other ones. We got some major ratings changes here. The brokers were busy here overnight. I'm going to start with Oracle because they are ganging up on Oracle here. RBC and Morgan Stanley both downgrading the stock today. I think they were looking up there. This thing failed at 36 again. This $36 level on Oracle has just been absolutely enormous. We got back up there earlier this year, multiple times trade over 36, but rejected it. We climbed all the way back up 3 trading sessions ago to get up to 35.75, rejected. Now we've had a 2-day sell-off, and Morgan Stanley and RBC must be looking at this and say we've had enough. And they're downgrading Oracle here today, and it's losing another 75 cents.
Aren't they one of the last company to announce earnings? Aren't they right at the end of the earnings calendar? Brent, correct me if I'm wrong here. Getting getting a big haircut here in the pre-market. We have taken it down, kind of trying to find a bottom here in the 33.75 area. We've made a low at 33.68, 33.75, but not really getting a bounce here. So can't really call the bottom yet in it. Looking at the daily here, you have crashed through the previous support at the 34.50 level. Now that will act as resistance. But I do see an area I do like is support here, Dennis. I might even be willing to do a wager here on this one.
Uh-oh.
Yeah, I like the 33.50 area. 33.41 was a series of lows.
You picking bottoms, Joel?
I'm picking bottoms. Gonna add that with a stinky finger, but I'm picking bottoms. 4 lows in a
Sticky
row.
fingers.
33.42 to 33.46. You had 1, 2, 3, 4, 5 lows in a row. I think that's going to hold up today, and I think Oracle, my wager is going to close above 33.50.
I say close above 33.52. That's a big move for Oracle, despite the double
Oh,
downgrade here
man.
today. I don't think this has got gas to get down below 30. Well, it could get below 33.50, but I think it closes above 33.52. So I'm on the same trade as you.
Oh, darn. Then you guys.
Well, you want to get taken out
everyone
like
buy the
before
33.50 puts. Buy the
Oh yeah, for sure. Now me and Joel both on the same side, so the herd mentality here is definitely going to take this thing the other way. So
Do you think
you
they
can
were
state our
selling this
calls.
ahead of the downgrade here? Look at this. Look at this. The last 2 trading days, this thing pretty.
Uh-oh.
I mean, the
But
market
that's
was
a
down.
big
I mean, I could
sell-off
see it
yesterday.
going down yesterday, because of the market. But look at the head start that they got on that thing on Tuesday.
Rejected. They thought it was going to break out and take that 36 out, but nope, did not. Couldn't even get up to there and turned around on Tuesday and sold off. And obviously the market knocked everything down yesterday. So market's still trading down a point here today. We have not talked about gold here yet. Bring it up. We're down 24 points.
Shocker.
Shock! It is kind of shocking
No,
because it was doing well there. I
uh,
thought I wasn't getting bullish here, but I was like, it was interesting that it had the nice big, when we were up 30 points there, and then boom, here we are. The market's not even trading higher, and gold's getting killed.
The thing with gold is when it has those big moves. I mean, and usually it has more than a day or two of Here you only had 1 day of consolidation, but it seems like all these moves, and I would say on the upside and the downside. If it doesn't have like the 2 day move, Dennis, you go back to your patented 2 day move. You had two medium up days and a big up day, and then you just held there. I mean, not at
Yeah.
any real major resistance level that you could have been leaning on. I mean, if you were leaning on the 67.50 high, you didn't get there. You got to 63.20 on Wednesday, so you can use that. Now you're back at 32.10 here. You have bounced off that low. We'll keep an eye on 12.24.60. That was the low on the ninth.
Some of these individual miners, they got right to key levels too in reverse. Look at Barrick, 17 on the kisser. The whole number's coming into play here. Double G, which is Gold Corp, got to 22.07 2 days ago, so right near 22, where it actually put in a high. It was 22.09 the day that it had broken down back in early December, so that kind of put in a double top. And then your favorite one, Newmont there, it got a little bit higher. It got up to 24.57 before reversing, but these things got up to key levels too here, because that's kind of where it broke down from, was the 24.57 area. So the old support becomes new resistance trick.
Hey, we're getting a little pop here in the S&Ps, Brent. Not sure if anything hit
Up
out.
2 points,
Yeah,
2 point pop.
We did have a bunch of 8:30 data, but after I reported the data, it didn't really do anything to the market. Could be a delayed reaction. I
Okay.
mean, we
Okay.
got retail sales a little better than expected. The jobless claims were higher than expected, and import price index was a little better than expected. Kind of mixed data overall. And like I said, it didn't react right at 8:30, so it could be a bit of a delayed reaction, or maybe just some buying over the 1780. I'm not sure.
We're trading the March contract now. Weren't you listening at the beginning of the show? We're trading March. We're not trading December anymore.
Look at Joe. He takes that offensively. And you know what? I'm going to keep the December up all day just
Oh,
to spite you,
you're
Joel.
Thanks,
rebound.
Dennis.
You're gonna wait till it to
Take that.
expiration day, and then you're gonna get stuck with all these contracts because you're holding big spoon
That's like my
positions.
strategy, actually. Yeah.
Okay. All right, we got about a few minutes here before our interview with David Ristau. If there's any questions coming out of the Options House chat room, we'd like to take a look at some of the issues that you're trading. Dennis, what about this ExxonMobil upgrade?
XOM. Upgrade ISI group today, and the stock is lifting. And ISI doesn't carry a huge stick, but they
Nah.
carry a little stick. And that's enough to pop the stock up 50 cents here. 94.67, it's 40 cents actually, I can't do math. 94.67 is trading right now after closing 94.26, so getting a little bit of yesterday's losses back.
Yeah, Dennis, I have a feeling you're going to be fading this one.
I would fade this in the 95 handle. I'm not fading the 94 handle. But I tell you, man, we talked about this 96 level and tried to take it out, and it did take out 96, got to 96 and a quarter. But when you look back at the weeklies and when you look back at the monthlies, $96 is the number on ExxonMobil. We got up there multiple times in 2007, multiple times in 2008. That's the all-time high up there. We got up there back at the beginning of November and kissed $96, could not take it out. Everybody got excited. Oh, finally 96 going up to 96 and a quarter. Not so fast. That little mini breakout, if you can call it that, became a fake out. Next day, cannot get over 96. That's your tell. And then yesterday, kaboom, stock.
Yeah, it did make a new all-time high. Former all-time high was 96.12. We did get to 96 and a quarter. Now coming back up. This is a little bit a tricky one, Dennis, and I will agree with you here. There's really no major resistance here because you just kind of flew through that area yesterday. So this is one that if you do want to kind of fade this upgrade here, the first 5-6 minutes are going to be key. I think if let's say you open up at 94.70, if you sit there a few minutes and it's not trading 94.75, 94.80, 94.85, then I think people that got stuck holding the bag are probably some market on close orders yesterday. I don't know if there was a selling balance there, but your short-term traders, that scooped up the close. We only closed a dime off the low at 94.16. So short-term players there, spoos are up a little bit, 30, 40 cents. I mean, they're not looking at, to hit a home run here. I will alert our traders here. 94.16 was the low Wednesday's trading, but you also have the 5 and 6 day lows at 93.92. So that whole $94 area is critical support. If you do fade this thing and you get through that 94.16, don't be a pig here if it gets down under 94 because 93.92 is a significant level.
Yeah, this is definitely one of those situations where sometimes you get an upgrade, you're like, oh, maybe it's going to get some follow through after this. This is one of those that I look at from a fading perspective for sure. I don't know where it's going to top out, but tie up in the 95.5, 96 area. There's major resistance up there. If you feel like it's not going to get that high, and I don't think it's going to get that high, maybe in the higher 94s here, it starts to run to a wall at 95. I'm not sure. So if for whatever reason it got up to 95.5, I'd be a happy seller up there.
Yeah, I don't
it's a
think
little different. You're a little ways away from where I'd love to be leaning, but I just don't think it's got the gas to get there, and I think they're going to line up here in the high 94s. Also getting upgraded LUV. Bank America giving some love to love. Stock is trading up here 1823 right now. Went out at 1797. Obviously bad day for that stock too. Every chart pretty much looks the same with a big vicious sell-off spike on the bar charts from yesterday. But we are getting some of those losses back today, and we are trading up 25 cents.
I wonder where they came up with the symbol on this one here.
Because they love their customers.
Oh, is that why? Okay, all right, thank you.
That was a softball.
Yeah, I slammed that one out of there.
I remember when they first came out. I was living in Chicago, and I went round trip for $9.99. That was
$9?
Yeah, $9.99.
That's how much they love you, Joe.
Yeah, and you also the only thing is that you had the seats. They probably don't even have those planes anymore in the back where you face the people.
What?
Yeah, yeah.
I've seen that. Okay,
Man,
I've seen
really?
that.
Yeah,
I don't like
yeah,
that.
that's
not showing me love. Those.
prop planes, man. That's when I was started flying. They had those little.
Here, everyone stare at this person for 4 hours.
Well, Chicago's not that
As
close.
they sleep and open their mouth and drools coming out. This is such an enjoyable, loving experience.
I did though. I had some frequent flyer miles on it, and I went out for the Rose Bowl in 1987, and I did have 3 stops on the way to California. I was using those frequent flyer. I had to stop.
That's a lot.
Yeah, that was a lot. So, but getting back to the stock here, I think this is too big of a pop here for this issue. It doesn't move a whole lot. Let's look at the pre-market trading here. Very light volume is taking it up to the 1826 level. Getting back a lot of losses from yesterday. That was pretty much a straight down move. I think you see sellers ahead of that. I don't even know if it's going to open that high. Major support $18 level, 17.95 was the low from yesterday, 17.90 back on the 5th. So we'll see if it comes back into that support area.
I'm sensing a bearish theme from you today here, Joel.
I'm not saying a bearish theme.
I'm sensing the bear getting stronger. He's coming out of his cave and he's starting to roar here a little bit. Talk about the S&P futures here, because what are your thoughts here? I want to know what the bear is thinking. He got this big down move yesterday, obviously over 20 points where we sold off. Is he thinking we're going to get some follow-through selling action here? Is he fading this 2.5 point rally that the S&P futures are having right now?
I'm gonna stick with the low that you have here. Yesterday's low was 1271.50. Okay.
You just low with the
yeah, you hit 12. Yeah, 12. What am I saying? 1771.50 was your low from yesterday. You had a low back in November here at 1770.50. You hit 69.50 in the pre-market, so I am not
triple bottom.
I'm not gonna harp on this major bear thesis until we crack that 1770 level, that pre-market low. If we do take out the 1769.50 low, my next support level is your low on the date before the 14th, the 13th at 1748.
Excellent.
And then the upside's tough because you're running in the air here because we whooshed down to this area yesterday. I would love, if they're going to pump this thing, early in the morning, we got a good thing going. I would like to see this thing at least at like 1782, 1783.50. I got a secret number at 80. Yeah, at 80.
Secret number?
Yeah.
You got a secret number? What's the secret number?
1783.50.
No longer a secret. 1783.50. Look at Sienna.
What's
Bring up Sienna. Oh no, I don't know what that was. That was a bunch of odd lot trades. But somebody just swept a book. That thing just swept up to 2170.
Really?
Oops. Yeah, I just watched it happen. Now it's offered at 2076. They had a little mini oopsie. I pushed the buy button too hard on that one. If you can bring up the
Whoopsie.
consolidated tape, 4812. The stock just went from 2070 all the way up 21 and a half, 2170. That was a big oopsie, I think, by somebody there, and it's immediately right back down to 2077.
Maybe it's your
So
buddy the Punisher out there or something.
Someone
the
just picked a
Punisher, these
whole
pre-market
bouquet of
after. I
oopsie
think that's the
daisies.
oops. I
That's good,
pressed the
Joe.
buy button too hard.
That actually works. I didn't think that worked.
Okay.
It pushed that man. Somebody just threw away a point on Sienna or 75 cents. So if you were sitting out there getting short 21 and a half, good job. Because you just got
Dennis, do you
executed
have
at the
time to be on
2075.
with us with David or
When's David coming on?
Right now.
I got a few minutes here. I can stick around, David. I got about 10:15. So yeah, is David
Okay.
here?
Let's do it.
Let's
okay?
do it.
Okay. All right.
You gonna put us on a break?
Oh, I thought you were just gonna. I looked at you and you're
I
like,
thought
yeah,
we
I'm
were
gonna
ready
put
to
him on right now.
rock.
Like, no
Ah.
break. Okay, we're gonna have a quick break. We'll be back with David Ristau. Welcome back, traders and investors, to Benzinga's pre-market info show brought to you by OptionsHouse. We are on with David Ristau, president and founder of the Oxen Group. David, how you doing today?
Great. Thank you for having me on. Thanks, guys.
Dennis, you want to give a shout out
Pretty
to
well. Doing
David?
pretty well, except for this bearish market that we're starting to look to
Uh-oh.
have.
Are you? Joel's been on
No,
here at the show all morning with this bearish theme going on here. He said he was talking a few days ago. He's got this whole triple top, the 1810 area on the S&P futures is the whole triple top theme, and he's been preaching bearish. Are you bearish too?
I was listening to the show before, so I thought no, I'm not too bearish actually. I don't see any reason why we're gonna see any taper next week. There's not a lot of conclusive data that I think is and you got kind of a lame duck with Ben Bernanke. So I think they are actually just using this as an opportunity to buy some stuff a little bit cheaper, and it's off to the races again next week, probably for another month. So
What would make
that's
you
what I
turn?
think
What would
right
make you turn bearish? First of all, what's your favorite indicator? I'd like to follow the S&P 500 futures. What's your favorite indicator, and what would make you turn bearish?
now. I look at a lot of stuff. We use a lot of different indicators. We look at a lot of economic data. We're looking at a lot of charts and doing a lot of technical analysis on those charts, looking for different key support lines. So kind of using a combination of both fundamental and technical. And I think for me, the level that I would look at for the S&P 500 would probably be maybe 1750 again. I know that's quite a drop still from there, but I don't think until you get below that line, you're really in a bearish market. I think you're just kind of having a little bit of a correction. You're seeing some profits being taken off the table, and some lack of buyer interest. And I think the economic data has been somewhat decent enough to support the market. I mean, there's a lot of conversation like, okay, are we overvalued in the market? And there's really not a lot of. I think you look at the S&P 500 PE ratio, and it's nothing. If it's not over 20 or anything, it's nothing overvalued. And so there's really, maybe tech is a little bit overvalued, but yeah, I don't see a lot of things out there that are saying to me right now, hey, this is a market that's primed for a big correction. I think you have a lot of things lining up actually for a really good year next year. You've got kind of Europe showing some strength again, a little bit of a rebound there. China's starting to pick up again, and I think we're starting to see some pickup here as well. And so, I mean, if that's about to happen, then how could we have a bearish market next year? So, just a kind of a combination of a lot of things.
I think a lot of people are still, you hear market structural issues and you hear high frequency trade, and then you hear, obviously, we went through the financial crisis there 5 years ago, and a lot of people are just scared of this market. And a lot of people are definitely underinvested. And now it's funny, you can look here, and a lot of people actually are pretty ticked off because some people really, got shaken out during the financial crisis and sold stock down near the lows. Now we're up here at all-time highs, and people are they just don't trust the markets like they used to. And I think that's why you see every time this pulls back, now it's starting to go the other way where people are like, man, I need to get some exposure to the stock market because I don't have it anymore. And it seems like every time we pull back 2-3%, people are coming in with their buying shoes on again. Do you think that trend just continues there, David?
Yeah, I totally agree. I'll use my mother as a perfect example because she's like an ultra conservative investor, and she hasn't touched the market since the crisis, and has been hitting me up lately asking me if it's time to get back in again. And
asking you for money? Is your mom been asking you for money?
No, I don't think that. I think she just was looking for a little assurance, and and so I think she's kind of just sort of a microcosm of a lot of people out there that didn't trust the market and just see, wow, it's just doing so well, and maybe feel a little bit better about the economy than they did 12 months ago or even 24 months ago. And so I think those things are lining up. I do think the market, though, has priced in a lot of that coming back into it at this point, but yet not probably enough yet still. So.
Okay, that 1750 level you gave then, that was basis the S&P 500 cash, correct? Not the futures?
Yes. Right.
Okay.
Yeah.
Okay. All right. That kind of coin. I mean, I got that 1748 level I mentioned was the low on November 13th.
Yep.
Basis.
Exactly,
Yeah. Basis
right,
the December contracts. So you got started at the beginning of the worst financial crisis since the Great Depression. Okay, and it taught you that the preservation of capital is the most important thing to any investor. Okay, and so here we are.
Right.
We're at all-time highs in the market. We've had a little bit of pullback. Are you putting on any hedges? Are you taking? Do you ever take profits? Are you just kind of like a Warren Buffett kind of investor, just buy and hold forever, or preservation of capital? Are you putting your theory into action at all?
So we do quite a few different things with our clients. We're in short term, we're in options, we're in the long term, and so we kind of think differently about each kind of sort of class of assets that we're working with at different points in times. But more generally, I'm still pretty bullish. I just every time over the past 12, 18 months that I've really thought, okay, this might be a turn for us. I've just been wrong. So it's just sort of hard to bet against the market right now. I do think, what we're doing is we're saying, okay, we're in these different positions right now, or different options, or things like that, and let's be conservative now. Let's not, we don't need to overdo. We've had such a great year. So we're using a lot of stop losses that are, and we keep raising those over time. And then we have been adding some different hedges on things that have been fundamentally weak while we've had a lot of strength. So things like gold, we've been pretty bearish on, and some undervalued equities that have not done very well over the last couple months. Those are things that we've looked at for some hedges. Like I think my favorite one has been, and I'm not going to say the name right, AKAM Technologies. AKAM has been sort of one of my favorite bearish hedges over the last couple months, just because of how weak it's been. Eastman Chemical is another one that we've been using for a hedge as well.
So when you're saying use these for a hedge, these bearish hedges, you're shorting these stocks? Is that what's happening?
No, we do. I'll use bear call spreads for those. We use options mostly for all of our hedging.
Okay.
So we're taking those positions, and we're going to dedicate just a small pool of money to do some bear call spreads, to write those options. I find that that's just a great way for me to, because even if Eastman Chemical rises a little bit, or Akamai does, okay, this is still in a pretty bearish trend. Akamai has been,
Right.
especially, and that I'm still going to be able. My hedge is still going to work, and I'm not going to have to worry about I'm short the stock and it went up 10% or something like that. I could still be correct in my bear call spread if that were to happen. So.
Now you mentioned
So
gold. You mentioned gold there
yeah,
just briefly. We're down 25 points here again on gold, the
yeah,
gold futures
yeah.
today. So we're getting slaughtered in it. You mentioned gold as a hedge. Do you buy gold as a hedge? Because gold is obviously usually supposed to be, anyways, a natural hedge in this portfolio. Hasn't worked well for obviously a while
Right.
here. But are you like looking at buying
Sometimes
gold here?
the inverse hedge. I would not want to buy gold at
So you're
all.
bearish gold too. Okay.
Yeah, because I don't see a lot of reasons to be in gold. I mean, okay, you've got equities just
Right.
continuing to outshine, and you want to be, obviously you want to chase the yield, or investors typically do chase the yield, so they're going to want to be in equities, and they're going to move their money. If they were in gold before, they're going to move their money to equities, and at the same time, there's not a lot of, gold was kind of propped up by, okay, we've got this quantitative easing coming in, we've got a lot of free cash coming in, that's going to help bring the yield down in bonds. Therefore, let's transfer from bonds to gold for some of your fixed income investors. And now that's going in the reverse way. Now that QE looks like it's probably going to be ending. I mean, inevitably it has to end, so that you lose a little bit of value there as well on the fundamental side. And then I think it's just one of those momentum sort of things. Just gold seems to kind of just find a trend and just sort of stick with it for quite a long time. And so I think it's going to take something significant, like another bear market probably, to sort of pull it back out of its current trend. And I just don't see it having a lot of upside in the next probably 12 months still.
Okay, so you work, your focus, I see is stocks, ETFs, option spreads, and whatnot. So are you not, not holding individual equities that much per se? I mean, if you're, bullish a stock, Apple or something like that, do you go and look to play it through an option spread, or do you
Um,
outright own many equities?
yeah, we have a portfolio that follows just equities, and it's more long term. And then we do have another portfolio that just trades equities in a more short term sort of swing trading way. So we do a combination of that, and then we also have a couple options portfolios as well. So we sort of have kind of run the gamut there, and I like that personally because that allows me a lot of exposure to a lot of different types of trading and investing. So I'm okay. I like these companies, these 10 companies over the long term, and then I can use those companies for some more short term options trading, option spreads, and things like that. And then I can also trade them in the short term as well. And so we kind of start from the fundamental side of things. We do a lot of equity research, a lot of we call equity analytics at the Oxen Group, and from there we go and we can use those companies for long term investing. Companies that are great long-term investments are also going to make obviously great short-term trades as well a lot of times, and then they're also great for option spreads. So it kind of works in all three ways.
Okay, so
Yeah.
do you have defined models that you follow, and you wait for the stocks to fit the criteria in your models and then act on them? Or I mean, are
Yeah.
strict programs that you've written, and algorithms and things like that?
No, no algorithms or anything. We use we're using really not basic, but more a little bit more advanced, like financial analysis and projections. So we're looking at companies and we're understanding their business, and then using current models that are out there as far as company projections and other models that might be from other analysts, and putting that into like DCF analysis, and then we can from there, from just kind of cash flow, we'll be able to sort of mine out like a 12-month or 24-month price target. Then we can take that price target, we compare that to the company, that gives us a really good sense of where we are in comparison to what we think the company should be priced at, given those projections. And then from there, we can sort of understand, okay, this is a company, there's a lot of upside in this company still, or, oh, there's not much upside in this company. That's not something I'm interested in. So people, there's like companies that like, people are always asking me on my site, like, okay, do I like Tesla, or something like that, or, last year, did I like Salesforce.com? And I would always say, that's a great trading vehicle, and sure, you can probably make some money trading it right now. But coming from a standpoint of I'm looking at a value, valuing up the company's business, I don't see a lot of potential in that name, and so I would be more interested in something that I see maybe is a little bit undervalued, but has a lot of probably potential growth in the next 5 years. So those kind of those sweet spots that we're looking for, a lot of undervalued names that have potential growth. I could probably throw a few at you guys.
Yeah, I was just going to actually ask you, looking
Sure.
at all this, what value stocks do you see that are, have the potential for some growth here and are still cheap? Because we've had such a run here. I know I get this question all the time. People are asking, what can I buy here? Because we've had such a run here. And, sometimes you got to sit and I'm like, I don't know, because everything's run so far already. Is there some stuff there that's still got some value?
Yeah, I think there is. I think at any point in time, in most market conditions, you're always going to find those names where they're just sort of, for whatever reason, they have some value, and then they also have some upside. So one of the companies that I've been really liking for probably 2 years now is PNRA Bread, and it's not really an interesting stock or an interesting name. There's not like a whole lot of sexiness to it, obviously, but it's a company that has grown double digits revenue for I think 8 out of the last 10 years. And it actually grew by 5% or more when the recession happened. And it's just a company that just continues to grow very slowly. They're very each year they're opening around almost 100 stores. And we actually did a little bit of analysis on the company, taking a look at geographically. Okay, their most highest saturated store to person ratio is in St. Louis. That's where they got started. And there, I don't remember the exact figure, but I think it's like one store for every about 70,000 people. And so if you project that out to the USA, they have the potential for something like 4,000 stores. Now, obviously, you can't, it doesn't work.
How many stores do they have now? Do you know where they're at?
They only have 1,500 right now.
1,500.
Right. So there's a lot of potential just domestically for this company, and then internationally, they haven't even stepped foot internationally at all.
Right.
They continue to see average checks kind of continuing to rise at their business, and so fundamentally, I really, really like this stock. Well, at the same time, they had sort of a little bit of a weaker earnings report their last report. They went from about 200 to 150. So that's a stock that is sort of starting to build a little bit back into, I think it's about 175, 174 is where it closed yesterday. And so that's a name where I think, okay, that's probably got the potential to probably 225 or 250 next year, just based on the growth that it should have again next year if it kind of maintains the same sort of P ratio. Let's see, another name we like. I really like the two apparel manufacturing companies, BFC and PVH.
Yep.
Those are two names I'm really high on. I like their kind of combination of, these are two companies that have a lot of growth. They've been doing a lot of building out their lines a lot and adding a lot more to them. I mean, for example, like BFC was kind of, for a long time, not really much, didn't have a lot, and now they've got like North Face. They have a ton of jean brands, and so what they're trying to do is kind of adopt this like lifestyle model where we can offer you something for every kind of different activity that you want to do, every different season, and so they've covered their bases, and they have a lot of really solid names in their pipeline, which I think is really good. And so I really like them fundamentally, and it's a stock that just sort of continues to just chug along. And those are sort of the names that we really like. It's not something like, okay, this company's going to grow like 3D Systems or Tesla or anything like that. I'm not really interested in those names because
a lot more risk.
If you catch it at the right time, yeah, you made a ton of money. But is that something you really want to invest into? Is that really something where you want to say, oh, this is where I want to put my hard-earned money that I've made for the last 10 years? I'm not really interested in going into those names because there's so much risk there, and those things have moved so much. Let's see, what else do I have
Have
here?
you been chasing
We get
Twitter around?
no.
That's
It's like
probably the
Twitter's
same.
another one.
That's probably the one right there. That's the scariest
Yeah,
one.
I think obviously I think it's a really cool company, and I think it's I think they have a lot of they have a place. I don't think they're going away. I think that companies have bought into using them a lot. So you see a lot of, especially a lot of media companies. You know, it's such a great tool for them, and so I don't see that is going to disappear anytime soon. But actually, I did a little bit of actually wrote a little bit of report on them the other day. You know, I was can't remember the exact stats. I'm trying to see if I can find it real fast. It was this company called T-Poll, and they're an English or a British company, I believe, and they did a poll of executives in Europe, asking them about Twitter, and I want to say that here we go. I wanted that right now. Yeah, here we go. So they found that the Twitter's reputation among executives had dropped. So last year, 61% of, or sorry, they had seen a 61% drop from 2012 to 2013 in European executives that trusted Twitter as a reputable source, as well as a 40% that respected that brand. And so that's a big problem for them, because if they don't have executives believing in their business or respecting their, or thinking that this is a business that's really something that we can trust, you know, they're not going to spend money on ads, and that's really, at the end of the day, what's going to drive
Correct.
that business or see it fail. So, well, maybe not fail, but at least not be as profitable as people were expecting. And so that's an issue for them. It's kind of like the same issue that Yelp is kind of going through right now with those, you know, fake reviews and sort of, can we trust this business? You know, so that's kind of yeah. So that's sort of why I'm not really
Okay.
too much of a fan of Twitter.
Okay. And just real quickly, could you just tell us about your product on MarketFi, marketfi.com?
Oh yeah, sure. Yeah. So MarketFi, I'm doing. I have part of my service that I offer at the Oxen Group on MarketFi, and that is the option spread portfolio. And this is a portfolio that is using sort of some of this equity research that I was talking about and some of this fundamental analysis, combining with a little bit of technical analysis as well. And looking for more conservative, low-risk option spread opportunities in a probably 2 to 3 month time frame. So we're looking at companies where we can find that opportunity to maybe write some credit spreads or take on some debit spreads for upside, and yeah, we're executing them on things that we like. We do a lot of combinations. We do some in equities, and then we're also using some indexes and some ETFs for different spreads. Sort of using a lot of ETFs and indexes more as hedges, or and also kind of betting with our thesis about the market at any time, and then using equities that we really like from the equity side or the equity analysis side. So I think we've had a lot of success because we've been able to start from that fundamental basis, looking at these companies over a long period of time, and then taking these more conservative bets on them. So just sort of consistently generating income in that way.
Okay, thank you. We've had David Ristau on, president and founder of the Oxen Group. David, I think you will get the award for being our youngest guest on the show. So we will definitely keep your market predictions in mind, and we'd certainly like to have you back on the show.
Thanks so much for having me.
Okay, we're going to turn it over here to Mighty Joe Young with the morning headlines.
Yo, good morning, everybody. Thanks, David Ristau of the Oxen Group, for coming on the show today. That was pretty sweet. I do hope we have him back on again. Although, isn't he the same age as Ed Cahill?
Yeah, maybe.
So it looks like we have a tie for youngest guest on the show right now. Sorry, David. We'll confirm, and if we have to issue a retraction on the show tomorrow, we will. But moving into today's headlines. An India court releases Nokia factory, opening way for Microsoft deal. Reuters reporting that in India, the Delhi High Court accepted an appeal by Nokia to release its local factory after it was seized by authorities in a tax dispute, removing a hurdle to the sale of the company's mobile phone business to Microsoft. Nokia appealed the seizure and wanted to end the dispute ahead of the closure of the $7.4 billion Microsoft deal. The court asked Nokia to deposit $367.17 million in an escrow account as a condition for lifting the freeze and transferring the facility to Microsoft. Canada Supreme Court to decide the market timing lawsuit. According to the Globe and Mail, the future of a class action lawsuit targeting mutual fund managers for a market timing scheme that allegedly costs ordinary investors hundreds of millions of dollars will be decided by the Supreme Court of Canada today. Dennis, I'm sure you're listening to that as well. Google executive plane saved millions due to a NASA fuel error. H211, the private company that manages a fleet of airplanes owned and leased by Google, several executives improperly bought fuel from the government at below market rates for a savings of up to $5.3 million, according to a report released by NASA Inspector General, as reported by Reuters. Apple's iPhone 5C will be offered for $27 at Walmart. The Los Angeles Times saying that Walmart will offer the 5C for $27 with a 2-year contract from AT&T or Verizon, and plans to also discount other Apple products as part of a holiday sale beginning tomorrow. And that's Friday the 13th. Ooh. That's, I think, our 6th Friday the 13th this year. China Telecom planning large-scale 4G trials in 40 cities. The Marbridge Daily is saying that the company has been approved to start these large-scale trials in over 40 cities across China, according to an industry source according to Sohu IT. Pegatron, an Apple supplier, is working to improve labor conditions. With growing scrutiny on its iPhone manufacturing plant, Pegatron Corporation has been working to make changes this year to its Shanghai facility, as reported by the Wall Street Journal. The Taiwan-based supplier to Apple has confirmed that 4 workers had died of illnesses recently at the Shanghai factory, but Pegatron and Apple said their investigations indicated that the deaths weren't linked to work conditions. Even before the most recent wave of scrutiny, Pegatron has been making changes. Home Depot plans to offer same-day shipping. The Wall Street Journal is saying that Home Depot plans to build out the capability to offer same-day shipping and delivery. The company will spend at least $300 million on supply chain technology and online improvements in the fiscal year that begins in February, including building new fulfillment centers and overhauling its warehouse technology systems. Samsung is going to shift China plants to Vietnam in order to protect margins. Bloomberg says that Samsung Electronics built the world's largest smartphone business in China, but will now shift output to Vietnam to secure even lower wages and defend profit margins as growth in sales of high-end handsets slows. Mullally and Elop lose ground in Microsoft's CEO race. All Things D saying the race to become Microsoft's next CEO. Ford CEO Alan Mullally and Nokia CEO Stephen Elop have fallen back, while 2 internal candidates, Enterprise Chief Satya Nadella and Strategy Executive Tony Bates, have advanced, according to All Things D. Meanwhile, Microsoft's board was rumored to be very interested in considering Facebook's COO Sheryl Sandberg for the position, but has not spoken with her about the job yet. In other Ford news, the Ford Board of Directors wants to know CEO Mullally's future plans. Reuters saying that Ford Motors board plans to press CEO Mullally soon for a decision on his future, as speculation intensifies that he may be offered the job of CEO at Microsoft. China Mobile begins taking 5S pre-orders. According to CNBC, China Mobile has begun taking pre-orders for Apple's iPhone 5S, even though the company has told CNBC that a deal hasn't been reached and negotiations are still occurring. CNBC was citing China Mobile's website. AMD, Advanced Micro Devices, cuts desktop CPU prices up to 30% for some models. Digitimes reporting that AMD has implemented price cuts for its desktop processors sold in China and North America. According to industry sources, the price cuts are being implemented to counter Intel's reduced price Pentium and Celeron models, as well as usher in the company's next generation Kaveri APUs. Wall Street has turned its focus to 3D printing stocks. Lots of coverage beginning this week. Makers of 3D printers have burst onto the scene with blockbuster IPOs and surging share prices, and Wall Street analysts have taken notice, reports the Wall Street Journal. Analysts at Deutsche Bank and Jefferies Group this week rolled out initial research reports on 3D printing companies such as Stratasys, 3D Systems, and X1. That follows analysts at Credit Suisse, which launched coverage of the group in September, and Citigroup in late August. And following with the Home Depot retail same-day delivery, major mall operators also to offer same-day delivery. As delivery becomes a key battleground between physical and online retailers, 4 of the nation's largest mall operators, Macerich, Westfield Group, Simon Property Group, and General Growth Properties are turning their properties into mini distribution centers for rapid delivery, reports the Wall Street Journal. The service promises set delivery times for purchases consumers make at the mall or online from mall tenants, facilitated by a Silicon Valley startup, Deliv Incorporated. And in other news around the globe, NBC reporting that the health director who approved the release of President Obama's birth certificate has died in a plane crash, Hawaiian officials said today. Loretta Fuddy died after the Cessna Grand Caravan aircraft she was traveling on went down shortly after leaving the Kalaupapa airport at around 3:15 p.m. local time, which would be 10:15 a.m. Eastern Time on Wednesday. The other 8 people on board were rescued. Richard Schuman, president of Makani Kai Air, told NBC News early on Thursday, adding that there was no indication as to why the plane crashed. Trivia tidbit. On this day in 1991, the Russian Federation gains independence from the USSR. And I've got some news desk trivia if anyone wants to participate. Well, a very famous singer was born on this day in 1915. Can anyone guess who it was? Yep.
1915. I'm probably the only one that was alive then.
1915. Very famous singer born on this day in 1915.
Can you give us a genre?
No. No.
Frank Sinatra.
Bingo. Joel got it. December 12th, 1915, Frank Sinatra was born. The American singer and actor who elevated popular song into an art. Frank Sinatra passed away in 1998 and was also known as Old Blue Eyes.
Dun, 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 dun. Is that one of his
Joel
songs?
wins bragging rights. That's what Joel wins. So that wraps it up for today's editorial headlines. Just remember, ladies and gentlemen, the show would not be possible without our dear friends at OptionsHouse, who offer 150 commission-free trades just for signing up for an account from this page. Click those links at the top and to the right. Open an account through OptionsHouse. Get 150 commission-free trades just because you listen to Benzinga's pre-market info. And because of that, not because of that, now that I've wrapped that part up, I'm going to pass it over to my friend Jake here, who's going to give us the pre-market movers ahead of the opening bell.
All right, awesome. Thanks, Joe. A couple things I want to go over real quick before we hit that market open. Facebook shares have been moving this morning. Foxtrot Bravo company got added to both the S&P 100 and 500 indices. It's going to be replacing Teradyne. We've seen some movement. Most of it came after the close yesterday, but we did see some more movement in a couple trades this morning. Shares are up about 3.7%. We've seen them as high as 3.8% gain. They are above that $50 level, though. In fact, above $51 now too. Joel, what do you think of Facebook? Obviously, it's been kind of on a downtrend recently. Fell back into the 40s, but it looks like this, addition to the index might take it somewhere else.
51.69 pre-market high. What I was hoping for was a little bit more of a bump up here, up to the $52 level. You had a double top, 52 even, 52.09. So I was hoping to get a little whoosh up there. If may look at a short at that area the first time. Dennis also did mention that, on a decline here too, you're gonna have the indexers here fighting over this thing. So if you're expecting it, to go right back down to $50, I don't think that's gonna happen. We're $2 above the close of 49.38, so it's gonna take a while for this to whittle back down.
Another one, another thing I want to note real quick is that the Facebook chart. Brent sent this over to me earlier, comparing the Facebook chart to the same chart as Google. When it was added to the S&P 500, it's really interesting how similar they are. When you look at them side by side, I don't know if Brent, if you want to throw that link into the Options House chat real quick, so everybody can take a look at it. It's a really cool comparison into the pair of charts. They both had a big earnings surprise. It started a run up, then there was a sell-off before the next earnings release, followed by an earnings surprise, then a larger sell-off, then a rally from the addition to the S&P 500, and now we're heading into earnings, which for Facebook, and then in the case of Google, that was another rally. So very interesting pair of charts to look at. It's kind of given some evidence to that cyclical theory of the markets, but just something to take a look at and keep in mind for.
I'm trying to get it up here on the Mac, but I just kind of these fancy Apple computers here. Is it coming up there? Or am I just totally confusing everybody here? We'll see if I can get my assistant technician Brent in here to bring it on, but. When he's doing that, just sell off before earnings. Oh, look at Brent moving it in here, moving it into the box here, helping me out. These guys, I'm telling you, you guys don't know how lucky I am to be working with these young guys. They know how to work computers and everything, and they help me out. But
that mystery technology.
yeah, good old Bert and Adam when he's not getting mad at me. I mean, these guys really help me out a lot. But oh, there we go. We were just bringing this chart up here. Maybe we can do a better job with it tomorrow. But go ahead, Jake. What were you talking
Just
about?
thought it was a really cool comparison between the two. There's another one that I want to take a look at real quick though, and that's Lululemon. We do know that they missed on earnings this morning. Shares are down almost 9%. They was high. They closed at 68.35 yesterday, and now they're heading down towards that $60 level. I mean, the shares just getting hammered right now, really selling off. And I love that debate earlier this week: Under Armour versus Lululemon, which one could capitalize more on their own weaknesses. And I think that debate. We saw the new Lululemon CEO, and now we see the miss on earnings. I was kind of taking a look at Under Armour, but not a whole lot going on with it. Joel, what do you think of Lululemon? I know you guys were kind of wondering if this is the end of this huge momentum rally on the stock.
58.02 was the initial spike down. And then you got to spike up right back in the pre-market here to 62.50 was holding for a while, and then it bumped up to 62.96. So we'll call that resistance here at 63. If it gets above there, it could get a chance to rally. And just going back, I try to bring some a little bit of action until what you see in the pre-market charts. And then yesterday I was just looking at this Costco here, and it really had got stubborn at 118.50 in the pre-market, and it opened up at that level and then declined. But once it took out that pre-market resistance at 118.50, it did have a nice run up over to the $120 level. So if you go fast forward a day, you got this good resistance and a stock that's down quite a bit here at the $63 level. That's the area I'd be looking at here. Get above 63 here, and I think Woo Woo Lemon can get back some of those losses.
All right. Another one I want to take a look at is another move that we've seen a lot recently, and it's Canadian Solar, Charlie Sandy, India, Quebec. Shares up about 1.6% this morning, above that $27 level. They announced another major contract this morning to provide 100 megawatts. We've seen a lot of strength in these solars recently. I mean, I'm just going to pull back and see what the 3-month chart on this one looks like. I mean, hello, where we were below $20. Hey, we were below $15 3 months ago. We broke above $30 for a little while. Now it looks like we might be getting a little bit more strength. Joel, what do you think of some of the solars this morning?
Yeah, I've been thinking about this, and we had that great interview on with Ed Cahill yesterday, giving us the positives, and we're gonna have Gordon Johnson on tomorrow and get his other opinion on solar stocks. But if I was to invest in a solar stock, I think this would be the stock. I mean,
Yeah.
it's had a nice. I mean, it really goes against my theory of buying stocks. I like when they're getting killed, but this one just doesn't have the volatility of these other solar stocks. It's had a nice run up to the 3250 level, little bit of a healthy retracement, and so this would be one that I might be looking to add to my portfolio in 2014. I like to support, that it's major support is building at the $26 level, so that'd be something I would play. I mean, that as opposed to like this SCTY. I mean, this thing is, you have a heart attack,
Oh
trading
yeah.
this thing over 60, and
Well, with
then
the Elon Musk premium and the volatility that's built into that one, it might go down on the solars or it might go down on Tesla. You never know what's going to get, or go up, for that same matter, and it might be 15% in a day, and that could be normal.
yeah, and I don't know. They don't have too many other sources of energy over there in Canada, so they might be leaning on the solar sector.
They got the power of the hockey arena somehow, right?
Yeah.
That and Tim Hortons. So
I
another
hope Dennis isn't listening. He's going to be upset with us.
another thing I want to take a look at this morning is Oracle shares were down following a downgrade from RBC Capital. It was just a basic report saying that the shares are fully valued, saying that they've reached their price target and they just don't see any catalyst for the stock going a whole lot higher. They say that pressure from cloud computing vendors and newer data solutions just doesn't warrant the company to continue its rally. So shares fell about 2% last time I checked on that downgrade. That's Oscar Romeo Charlie Lima. Joel, what do you think about Oracle, and for that matter, someone like maybe Cisco? Some of the bigger big cap techs there.
Uh, well, 3368 is the low in the pre-market in Oracle, and traders better watch out because Dennis and I were both in agreement here that this quadruple bottom at the under the 3350 level was going to provide support to that stock today and perhaps inspire a rally. So when Dennis and I are in agreement, it's either a really good thing or a really bad thing. Cisco, I haven't taken a look at this puppy in a while. I mean, a little bit related, a little bit kind of its own monster here. Trading quite actively here. I wish I could get a good daily chart up here to take a look at it. Let me see if there we go. I guess I'm just too quick on the trigger here. I hope I'm not making people dizzy. That stock is breaking down, making a new now it hasn't hit yesterday's low, so let's see the action that you get in Cisco at yesterday's low was 20, so that's the 15-minute chart. Yesterday's low in Cisco was 2076. You haven't hit that level yet, 2065. Let's see if that support can hold today.
After that sell-off yesterday in Micron Technology, Mike Uniform, we're getting a little bit of a rally this morning. I know we did just get that market open, and I'm seeing a little bit more strength here, sitting at 2270s. Looks like the last print that I'm seeing right now. So maybe looking at that $23 level. Joel, what are you thinking about Micron? We had a little bit of a gap down yesterday. Nomura did issue an upgrade to a buy rating this morning, giving it a little bit of strength.
Man, Micron is in the 20s. Where the heck have I been?
I know it's been rallying hard all year. It's one of the best performers in the S&P this year, actually.
Did have a little bit of a haircut yesterday, considering the run that it's had, going back in November at the $17 level. It's nothing to get too alarmed about. We are trading positive on the day. We are still 20 cents away from that 22.91 high. So since you did dip off the 23.67, 23.44 level, you did trade down into the lower 22s yesterday. Maybe some people start ganging up in the 23 handle here just because they feel they might have missed the top. But you really don't have any major resistance until you get to that double top 23.44 to 23.67.
That stock is up over 280% over the course of the last year. Quite a rally for Micron.
So what are they, like DRAMs? Is that what they are? Are they?
Yeah, they're one of the DRAM providers, and despite some bearish reports recently, they keep on rallying. So, yeah, CNBC, every time they're talking about Micron, they try to bring up Regis Philbin, who I guess he's a really big bull on it.
Really?
Yeah, I don't know why he's relevant when it comes to Micron, but they bring him up every time, trying to get him to call into the show, and he does it every now and again, pounding his fist on the table, saying he's still a bull on it. But I just still don't see the relevancy.
Regis and Kathy Lee, are they?
Yes, that
Yeah,
guy.
yeah.
Well, I mean that I think that show's done with.
Oh,
But
really?
yeah, but I mean I guess I don't know, maybe he's a trader. I don't know, maybe that's what he does in his his spare time now that he's not doing his show.
Maybe he's listening to Benzinga's pre-market info brought to
Hey.
you by OptionsHouse, but
Hey.
he's a Notre Dame fan.
Ooh.
Yeah, so okay,
Yeah.
we won't hold that. Okay, Jake, is that it?
Yeah, that's what we're looking at today. I'll let you carry the show through the open. I'm gonna go get some news ready, and I will hand the mic off to Brent.
Okay, S&Ps are open for action here, and we are just trading above unchanged here in the S&P futures. We are not getting super well. We had David Ristau on, and he is just telling us that just another buying opportunity here in the market. We've had another correction. So far, his prediction is coming to fruition here. The S&Ps are unchanged, kind of trading in the middle of the range that we established overnight. So that 1769.50, a little bit below the low that you had on the 4th, and just got some key levels here at the 1770 level. We did take out the prior day's low, which was 73 and a quarter. We closed right above that, but still good to go north as long as we hold that 1770 level.
Joel, I don't think my S&P futures switched over. I'm still looking at the ES, but they didn't switch over. Is there a different ticker I should be using?
I'm looking at the March. It's ESH.
Thank you,
Yeah,
sir. That's
so,
gonna help me. I feel like.
just to make sure that I am not a day early here, looking at the volume. I mean, there's pretty similar volume here in the two contracts. The S&Ps here in the front month have traded 160,000, and then if you go to the December contract, which is rolling over, they've only traded 42,000 contracts. So I am correct. March is the front contract in the S&Ps, so it takes a day or two to adjust your numbers, but taking a look at the March contract. Let's see here. We talked about the ExxonMobil upgrade here, and Dennis wasn't so apt to short this in the 94 handle. I thought the upgrade might get a little bit of follow through. Opened up, made a new high here, 94.44 low. If you're going with the upgrade, you didn't take too much heat off the open. Let's see what happens at this 95.15 level. I'm using that as a potential resistance point here for ExxonMobil. Facebook, despite getting added to the S&P 500, they really overshot this thing in the pre-market. Yeah. I mean, if you're not an indexer and you're playing this thing from the long side, Brent, why wouldn't you use this opportunity? If you hit your target price at 51 or 51 and a quarter, why not use this opportunity to get out? I think that's kind of what you had here. We did have a nice dip off the open here, 51.04, 51.27 high. And in order to get into yesterday's range, so you're not looking at a gap situation here in shares of Facebook.
I feel like it was pretty well telegraphed. I mean, sort of like what you're saying. I mean, we had the UBS analyst a few days ago, last week, saying, "Oh yeah, it's gonna get added this day," and then that was actually not the first time that UBS analyst had put out a note like that. So I'm thinking it's kind of like a sell the news sort of thing.
Yeah, but as we were discussing, the indexers can't, Dennis kind of jumped on me about this one. The indexers can't own it until it goes into index.
Right. So maybe the retail guys are sort of anticipating, but that doesn't really mean a whole lot.
Yeah. Okay. And we'll see. I mean, it's made a 50.66 low. We had we filled the gap from yesterday. If you're a gap trader 50.77 and you had your bid out there, you did get filled because we came down and filled that gap initially. So see if we can hold that morning low. I think as you get back into the 51 handle, though, I think sellers will be back out there as well. Looking at some of the other issues that we covered today, and I really want to take a look at this Oracle here. The double dip downgrade, trading lower on the session here. Just skimming at these pre-market lows here. Traders should be paying attention here. The quadruple. Oh, look at that, 33.30. It did get below that 33.50 level that we had talked about, but you are getting a nice bounce up here. So if you were fearless, had that 33, I think 33.42 was the lowest of those lows in that triple bottom area. You got a good fill there, and got a ways to go to fill that gap at 34.42. Other issues that we talked about on the show today, Lululemon. Bad news. Nothing but bad news in that stock today. Made a pre-market low, very low, 58 bucks. I don't think anybody caught that at that level, unless you were, I think, up in the middle of the night. You are getting a little bit of a rebound rally here. We had talked about some of the resistance at 63, but it did take that out here. So Lululemon doing a little bit of recovery here. Let's see what the high is in that issue. I'm trying to get it for our traders here.
Let's see.
The internet gremlins are out here.
Uh-oh.
Yeah.
The old gremlins.
Yep.
What kind of period high are you looking for? Like
I got to 64.38.
Okay.
I mean, it did get through that. It was having some trouble at 63 in the pre-market, but if you would have bought it going through that 63, you had $1.25 to get out before it turned around. So already a 2-point range in Lululemon here.
Wow,
so.
this thing hit a high of 72.50 on Tuesday morning.
And then now,
down 10 bucks.
Hopefully, if you were an owner of that, selling ahead of that.
Yep.
I don't know. These retailers seems like once they lose their luster, it's really hard to gain it back.
Well, I think that retail is like very trendy, very sort of faddish, So a lot of momentum goes into their stock prices, I think.
Yeah, and looks like they've also had multiple CEO changes, and didn't that guy made a comment that fat people shouldn't wear Lulu stuff?
We're not supposed to talk about that.
Well, I'm not saying that. I don't care if fat people wear Lululemon clothes. It was just if you're the CEO of the company, you're not supposed to say that.
He said something sort of along the lines.
Okay. If there's any other issues that we haven't covered in the Options House chat room, please let us know. We'd like to take a look at them on the radar. One stock that Chelsea was looking at this morning just had a ton of good news. A big deal with Roche. Prothena Corporation hasn't quite got to its pre-market high, but is trading up in the session. For those of you that are wondering how high this thing got, I believe it was 31.50 in the pre-market trading. The deal with Roche to co-develop things got to 30.27 so far in today's session. The pre-market high was even above 31.50. It got to 31.90. Doesn't look like that's on the radar today, though, for the issue.
We got SunEdison, JH's SunEdison down about 4.5%, 12.20 the last trade, but it is off of the pre-market lows. Hit a pre-market low, I see 11.31.
Really?
Still down a good amount from yesterday's close, but looks like rather strong bounce off of that morning low.
You're right. It did hit the pre-market low. We were talking about the dailies here. And on the daily chart here, really didn't have anything at where it stopped. It stopped at 1173 here, so really didn't have a good parameter to look at. Did talk to JH3 about maybe getting a little dirty if it got above the $12 level. Opened up above 12, dipped under it. So
wasn't he taking some profit in it recently though?
I hope he was.
Last week or 2 weeks ago or something.
He might be gone now. I hope so. I know we were looking at some resistance points, so. hopefully he's open.
Hope he got a little,
Yeah.
got out of there a little bit.
Yeah, I'm hoping to re-enter the trade. We have another 30 cents to go though to fill the gap, which was a former double bottom at 12.63 and 12.66. So another 30 cents there to fill the gap.
Joel, I'm looking at the IPO of Hilton. I don't think we
yeah.
got to talk about it earlier. They price at $20. Ticker is going to be HLT. Obviously, there has been no trades in the name, so you can't exactly go take a look at some of the levels. But it is a really notable IPO that's coming to the market
So they
this
they
day.
were a regular company, right? A long time ago, and then who took them private?
Um,
Because I remember I used to trade that back in my days at Oldie,
Yeah.
HLT. And
I can't remember. I
well,
mean, do you have any fancy smancy stories about staying at a Hilton? Any anecdotal information?
I'd like Hiltons.
Yeah.
I've stayed at some Hiltons. I stayed at a really nice Hilton down in Hilton Head, South Carolina. I stayed at a
Ah.
Hilton, and I liked them. My stands, well, first of all, hot. That's Starwood, right?
Right,
That still,
correct.
yeah.
Yes.
First of all, when a stock IPOs, I like to take a look at other stocks in the
There
sector
you go.
and see,
Okay.
see how they
You
perform.
caught my bait then.
Right, and Hot's been a good performer, dipped to the $72 level. I know it's been a strong performer. What's the symbol for Marriott? MRT?
MAR.
MAR. I'm having a little problem bringing that symbol up. So I like to wait for the dust to settle a little bit in this. The hotels have been good performers. You like to follow the IPO prices. Obviously, the IPO price for that Twitter. If you were trying to stay short under 45, it kind of worked out. If you were able, not like me, to get bullish when it got above 45, you're sitting on some good profits. So
You know what might be one to look at is didn't Hyatt just recently re-IPO? That might be one to look at. That's just ticker H.
just take your H, huh? Boy,
Yeah.
they got the Hyatt Group. Let's see if we can pull that up here.
Maybe I'm thinking of a different name. I'm seeing like a full couple year chart on Hyatt, but I thought that they just came back to the market.
What's
I
the
don't
symbol?
know. Just H.
Yeah, I'm having a problem.
Just hotel.
Okay, H for hotel. That's pretty easy.
Yep.
Okay, we're entering the last minute here of Benzinga's pre-market info
No.
show, brought to you by OptionsHouse. Remember, if you click on the banner at the top of the page, you get 150 free trades. Brent, what's on the radar for tomorrow?
Let's see. Let me pull up my trusty earnings calendar really quickly. Well, we do have Adobe after the close today. That's usually a big one in the network space that people like to watch out for. Tomorrow, let me pull that up.
And isn't tomorrow Friday the 13th?
Oh, Friday the 13th. Yeah, actually, I don't see any earnings tomorrow morning, which is, I mean, the earnings season is winding down. We probably only got about a week or two left of some of the bigger companies. I think we got Oracle. You guys were highlighting a little bit earlier. Oracle next week. I think we also get FedEx next week. Tomorrow should be pretty quiet.
Yeah, then we can just wait for Alcoa to kick off earnings season again.
Ah, jeez.
And had to mention it.
That's fine.
Okay, folks, thanks for listening to this morning's broadcast, and we'll be back with you tomorrow.